Hey guys, what's going on? This is Leo. Not financial advice, not a financial advisor. So I'm going to try to make this video quick. I'm really running behind today. I've had some errands to do. I had to go to the dentist, and then I had to take my puppy to the vet to get his 11-week-old vaccinations. So let's go ahead and dig in here, see where we are. So on the bigger picture here, we're on the 30-minute time frame. We're under the assumption that we put in a truncated fifth on the ending diagonal here. We saw that spike in volume. We've put in a 1, 2, right? So we have an A, B, C for the 2. And now we've done 1, 2, 3, 4, 5 for your third leg. And we're working on the fourth before we go up and put in the fifth of the first. This needs to be dropped 1 degree. There we go. So just zoom in here just a bit. Okay, so first thing that I notice whenever I'm looking on the chart here, just take a moment, see if you can tell me why we stopped there. And pause the video or whatnot. I'm gonna go ahead and tell y'all in 5, 4, 3, 2, 1. Okay, so right here, if you look over to the left on the volume profile, there's a low volume node. Right there, exactly where we stopped. Interesting. You know, these low volume nodes, I mean, they are paramount to determining to the exact, cent almost, depending on how big the volume node is. I mean, exactly. I mean, you're right. Let me do this. I can put on a, it goes right to that low volume node. Exactly. Right there. You know, that's just incredible. I've been doing this for years and years, and that still just amazes me how accurate you can be with this stuff. So I'm going to go ahead and remove that. Now, one of the rules in Elliott wave theory is that the fourth wave cannot retrace into the territory of the first, which is why I have this green dotted line up here. So we won't, assuming this is a 1, 2, 3, and there's not some more complicated correction going on, which I don't think so, because, as we've talked about with the fib time relationship here, if we just pull this up, I'm already starting to ramble. I know this is going to go longer than I want it to. So, you can draw up your fib time, and you can see that the most likely point for a correction to end being the 618 here. That's right where we ended, just a hair past it. So I don't think that's likely that we put in any more lows at this point. Zooming back in here, so what that would tell me from an Elliott wave perspective then is that if we're on a fourth wave, that we won't go past 3874 again. If we did, it doesn't mean that the bull case is out. It just means that we probably put in some on a 1-2 and a 1-2 of some kind, and I would have to recount it. So let's go ahead and dig in a little closer here. I'm really going to try to keep this video under 10 minutes if I can. So somebody was asking me whether I thought that we'd completed the 1. I'm assuming he's talking about, well, I don't know where it is now, dang it. The larger one up here. And the answer is no, we haven't, because what it looks like to me is that we've put in the fifth of the third, because it did go a hair past the high. So it's not really a double top, in my opinion. I'm splitting hairs there, but it did make it like 5 cents over the previous high. And also, if we come here with our measurement tool, we go here. If we go here, project it up from, that's not right. All right, so measure the length of your first wave, right? Project it from the termination of your fourth wave to get the target for your fifth, which is going to be, most likely target is 100% since the third wave was already extended. It's not likely, it's just not likely you have 2 extended waves, meaning that your third wave is extended and your fifth wave are both extended. So, your target for a fifth wave there is $48.80. We missed it by 50 cents or something like that. So, you're close enough that I'm thinking that that's a fifth, right? So, and this looks very, very much like some sort of, I'm not even going to bother trying to count that just because it's so choppy. It's some sort of a combination. I mean, this is the problem with some equities you run in where you have all these gaps, and it's just the price action gets. I mean, you can't see anything. There's nothing there to read. But it just looks visually, it looks like some sort of a fourth wave correction. Um, so going ahead and digging in here on the larger degree fourth, that would be this one. What I think fits the best is, let me delete this, is a WXYXZ correction. That is going to be a sharp triple zigzag pattern. So if we come in here, we can see that we get this ABC structure for the first zigzag of the correction. Then we get this. This is what you call an expanded flat. And what that means is that the B wave went beyond 105% here of your A. So the way you would do that is you'd come in here, you'd measure your A leg down, up, and as you can see, there's your 105, there's your 100. So it's gone past the 100, it's retraced 105% of the A. So then it's gone past, the C leg has gone past the termination point of your A. So that means it's an expanded flat. Now let's say that the C leg didn't go up this high and it went here, it fell short, then you'd have a running flat. So this is going to be an expanded flat for the X wave. And now I believe this is a AB. Then you get 1, 2, 1, 2, 3, 4, 5 for the third, 4, 5 of the C leg of the Y. And then we get another expanded flat correction in for an X wave. And then we get ABC down for the Z. It's unclear. I haven't counted this last leg, so it's unclear whether it's done. But looking at that low volume mode, it's very likely we're either done or we're very close. This is kind of looking a little sideways, so we might have one more little push down that would bring us down here to the 50% retracement right there at 39.43. We have a low volume node, so it's possible we come down there to peg that 50 and then we launch. Nothing's guaranteed there though. One thing we can do is we can pull up the, you still want to measure your legs here, so we pull that up, right to the 100% projection for your ABC there. So it's probably really close to being done, and then we're going to be working higher here. So what I'd be looking for if I were planning to trade this, just as an example, what I would want to see is a high break. So these highs are great, but what I would really want to see is a move above those EMAs. So if we get something, let's see here. So if I get a move like this, right, that's what I would be looking to get in on. So we've broken this this swing. What is that called? I always get these mixed up in my head. Lower, there'll be a lower high. Yeah. So you break your lower high here, which means that your trend is moving, because you have to break your swing first, right? And that's what these are. That's a swing. That's a swing. And people refer to them as, if you come up here, you put in a higher high, higher low, higher high, higher low. The opposite, it would be you put in a low, lower high. So that's what that is, lower high. And then a new low, and you have to break that first, right? Because that's the essence of a trend, is making a series of higher highs and higher lows. And once you break one of those, well, now you have the first chance for a trend change. So if I were to trade that, I would look for a break of this swing, right? Because this is more significant than breaking one of these smaller ones. The smaller ones can be a little bit more subjective. So I would want to see a break of that. Getting above the EMAs is good, and then I would be looking for that. So I'd be looking for the algo action. Maybe we get a little low volume node. That'd be some good confluence at the 50 or the 618. I'd like that trade, especially if I want to see. Notice here, this is something that's interesting about EMAs, is that you notice how you kind of get through here, but then you come back and you sort of chop around and then you fall. That's not what you want to see. What you want to see is a clean break through the EMA. So, for example, here we kind of come up a little bit, but this is really what you want to see. You want to see a clean breakthrough with strength, come back, you get two legs back, so A, B, C, right, and then bounce. That's what you're looking for. You don't want to see it go through the EMA and sort of linger. So kind of like how it does this. It comes, they shoot it through, trapping those traders to the long side. It falls back. It kind of chops around the EMA, hangs, and then it collapses. Same thing here. It comes up, kind of, just hanging around it, and then it collapses. And that's just price action reading. That takes time to learn, just getting the right eye for it. But you look at these charts enough, and you kind of figure it out. I mean, here's another one. They kind of get it through, but it's just chopping around at that EMA. EMA is going flat. This is a range. You don't want to be trading in that. Congestion, trading ranges, uh, complicated corrections are the most difficult things to trade. You just stay away from them. Trade the impulses. Trade the easy trades. This is an easy trade because now, I'm getting in here, right? My stop would be below the low. Some people would put it here because that's uh, that would be your, what do you call it? Invalidation point for the computer algorithms, because once it goes past the golden zone there, they're not going to be wanting to buy anymore, and you would have the sell algo. But what I found to work better is I like to put it below the low, because typically I call this a big brother, little brother trade. So what I'm trying to do is uh, I'm getting in on the bigger move. So, oh, I guess we hit the 50. Oh, okay, so we hit a 50. Whoops. I'm not sure where I had my other one pulled from. So anyway, so we're at the 50. So it's very likely that the bottom is in. So this is why I call it a big brother, little brother. You have this larger measured move, right? And so we get a move up, we break a swing, right? So it's the first sign that the trend is changing, right? So it comes back down. I get in there. I put my stop below here because this would be this is your low of the swing, right? So that's where I would want my stop, and I can do that because my risk to reward is better. I won't be targeting here, right? So I'm trying to get in on the bigger measured move whenever I take a trade like that. So my profit target would be up here. Or if it's a third wave, I'd be targeting way up higher. I'd be targeting 162% of the one wave. So that's what I call that a big brother, little brother type trade. But so I mean, it's looking good. Looks like the correction's done. We're at a 50. We'll just be looking for that. We're going to be looking for this now, moving into the new highs. So I think I'm going to wrap this video up. If y'all have any questions, drop a comment down below, and I'll talk to y'all soon. Bye.